The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour for the second day of March. My pleasure to be here Monday through Friday, noon until 1 p.m. Eastern Time, of course. Now, there are a couple of things going on. The Dow's down 200 at 24,414. Technical Friday today in relation to the Chapman wave methodology. So let's just go. Daily makes that arch formation. In fact, somewhere I've drawn this, might even be on here, but I'm going to draw it again. And I said, that's the pattern that we've got to look for if there is a stalling out below the all-time high of 26,616 on the 26th of January. We've already had the internal low, and now we're looking to see, is there going to be possibly a residual low close to, at, or just below the previous low of the 9th of February. Now let's go through these one by one. The Dow at this point is down 200 at 24,400. The S&P is down just 3 at 2874. The composite index is up 16 at 7197. The VIX spiraled higher. Now it's down 22 cents to 2218. You've got the E-mini down 4 at 2873. And what we're really looking at here is this weekly chart formation is something, I call it the Grand Canyon cliff on the left side. It is very difficult to surpass. And if it does do that, it needs to go not just to the top, but above it and then hold nicely above it for about 1 or 2 bars. In this case, it's a weekly chart. The monthly chart had a leg E to the upside. It had no peak since 21,169 that was made back in May, was it? In March, a year ago, in the Dow. Since then, it's only had it pulled back modestly, and then it's only had higher highs every single month until January's high. February concluded with the Chapman wave Roman candle right there. This is the pattern. What does it mean? Let me just show you something. I told subscribers this is what we got to watch out for. It's this one here. Right here, I sent a note saying, heads up, making a Chapman wave Roman candle just off a major high in the monthly chart is first just a warning that a deeper decline is imminent. It only gets triggered as a big negative if there is a period of trades below the lower wicks midpoint, in this case around the 24,300 level. We've already gone through this. This was, look at that candle there. That was the close of February. Then for weeks, actually since late December, I've been showing this chart. I was definitely a month, way early by a month. But the pattern, I said, sharply lower, then a bounce, and then a retest, if there's the H pattern. If it continues higher, we need to see decisive closes, as I said earlier last week, above the 26,300 level. We had managed to get a long position in the Dow the day after the exact low, that Friday the 9th. And then we added, and we had a trading one, but we got another trading one in that peak C in the daily, thinking and I said it's just for a trade to get to a leg D. That one actually went high, but it did not make the D, and it failed. And we were also taken out of our I wanted to be a longer term position. So negative, no positions in the Dow. But these are the patterns that I've been talking about, trying to articulate it as clearly as I can. I was asked about the gray legs. Let me just articulate. I've said this for years and years. I'll try to do it again. I know it's a little complex if you aren't actually looking at the charts. when you've made a serious pullback, especially from a peak D, E, or F, come down sharply. When you start the new buy mode, I call it gray A, because under that previous high, at any point it could fail and make that H pattern. The reason why I said that at peak C I wanted to try for a leg D is because the 120-minute chart was holding really well. Look at this. That MACD was up there, right there, and the stochastic was flattening out at 97%, I believe it was, on balance of volume. On balance of volume. Hey, 98.96. So I thought, okay, if it flattens out like it did there, it allows for higher highs. Well, it didn't. And that's just the way it is. So now what I'm looking at is, I've been warning about a failure in the pattern. I was warning that the IWM, which today is actually doing very well, look at this, up 1.13, had already made a peak D. And that suggested that it was showing early strength in the letters, but not early strength in the power of its move up. And that was making me nervous. I mentioned that the New York Stock Exchange hadn't shown a very strong move to the upside. It should have been at least in the 13,200s. In fact, to stop right there, after going from 13,600s to the 12,000, was it 100? 12,048 level, bounces to just over 13,000, 13,018, and then fails. That's not a good pattern. So gray A becomes a blue D only when it fulfills the buy mode, which is the objective of getting to a D. So the IWM, even though it had a lousy rally, did get to a D. And the MACD and stochastic are now on watch to see if by the end of the day I put a down arrow, then it has to restart. But it's nice. See, this whole rotational aspect is very important, because within the context of the rotation, I'm already looking and saying, hey, this is a stock that we identified perfectly the other day as an entrance for this leg C to D. It had a really good move, stopped us out at break even as the market turned around for 400 points, and now it's up very strongly today. And to answer the question, yes, it's gray only in explanation. It's not saying because it's gray that it has to fail. It's gray because it could fail and it's under the previous high. If it goes to a D and then starts to go even higher, that's really good action. So as far as I'm concerned, I'll try to articulate that as much as I can. I'm just going to tell you right now that the monthly chart is imperative to look at. We've already gone below the halfway point that I said is 24,300. But I'm saying, and I'll say it again, it's the weekly close. If the weekly close is below 12,300, that is going to be a big negative and suggest sooner rather than later we go down and test the lows towards the lows that were made at 23,360. I hope that's clear. Okay. Now we're about to round time. Let me just quickly go. Gold was up 18, now it's up 15. To tell you the truth, I'm looking at gold and I'm saying there's a chance that there's some kind of a play in gold as it becomes an action of fear for people to say, whoa, I think we need to get into gold.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, Ron, we're back. So the TLT, let me just go to the yields. Because look at this. The 30-year, the white one, this is the 30-year TYX. Hit 32.21 last week. It's going to make a peak C today in the weekly chart. The rule of the Chapman Wave is to get to a D at least. You can go higher, but D is the minimum in a buy mode. And this is in a buy mode. You're already making a peak D in the 10-year, the brown, the TNX, and the cyan one is a, what did I say it was? A leg D, right? A leg D 7982. Yep, it's a leg D. So we've got 3 different letter implications in the Chapman Wave methodology. The weekly 30-year T-bond yield, the TYX, is suggesting that there should be higher highs to come, number 1. Number 2, the 10-year says, I've done my job, I've gotten to D, but if the TYX makes a leg D next week or the following week, a higher high above 32.21, doesn't have to close, just has to go to 32.22, 3.222%. If it does that, I should follow, and then I'll go to an E. The 5-year, the FVX, cyan-colored one, is saying, I've only made a leg D. I have the whole of next week not to not break above 20. Oh, sorry, that was 29. Oh, let me do this again. Yes, I was correct. So that's 82. To not go above 26.82, and I'm trading now at 26.25. That's a big difference. So if next week there is no new high in the 5-year, that's making a peak D. That will confirm for a second week that's a peak D in the 10-year. And it says, we'll see if the TYX, the 30-year, can go above 32.21. Otherwise, that's also, and that's saying that there's a little temporary respite between now and maybe a week or two, because you have to go all the way through Friday, and we'll be watching the yields. But look at this: the TLT made a trough D, rallying quite nicely, holding the 9-period moving average. Not looking that great in the weekly chart, looking very bad in the monthly chart. So it says by Tuesday or Wednesday of next week, the TLT needs to be in the 119.80s or higher to say, aha, now we're doing the job. And that'll be the daily leg C. The weekly will improve a lot, make the 120.59 a potential target if everything remains positive. And look at the TBT. The TBT is the inverse. This is the Lehman ultra short 20-year Treasury bond fund, and it's made a peak D. I have to wait for the end of the day to see if I'm going to make that a down arrow. And there could be a short-term top. That's 20-year, right? But it's a leg C in the weekly, and that weekly has done a beautiful cup formation. Look, one of the Chapman wave techniques in my CD, introducing the CD book, introducing the Chapman wave methodology. Went from the left side to the right side, just broken in exactly the right period of time. Went to the C at 39.86, the week of the 23rd of February, last week. It's pulling back, but the MACD and stochastic are still very strong. That's suggesting to me yields are going to go higher. Okay? So I wanted to do that. I want to go back now to the gold. Gold up 15 and 13.21. It might be a little bit behind. Couldn't close above the 9-period moving average so far today. That's at 13.23. But I am looking at this and I'm saying to myself, okay, in a market like this, a lot of people are going to say, where do I go? And my thinking here is that there's a chance that the gold stocks actually don't go spectacularly higher yet. But gold holds quite well. And in holding quite well, that 200-period moving average of 13 is very strong support, 1300 in the daily chart and continuous contract. And 1340 is kind of upside limit. And now we're looking at a potential trading band for gold for the first time in quite a while. Kind of the way I'm looking at it. Everything is absolutely negated if gold goes under 13, closes under 1290, and if the dollar is able to pull back a little bit here, going from just under 91 to just under 90. But it seems to me that the dollar's telling me that this is another one of those big bounces, and it's not really doing very much. Dollar goes above 91.70 into the 91.20s. It's a different picture altogether. Okay. I think I'm covering the things in order that I wanted. So far, the only thing missing is the crude oil and high-grade copper. High-grade copper is also saying, now I'm kind of in a trading band, a smaller trading band than I was. So watch 308 as some kind of near-term support, but absolutely 3.04, the 200-period exponential moving average, that better hold any weakness, and $3.17 is the resistance, and it's down a fraction of 3.11 right now. Crude oil. So crude oil, I said the same thing. I said I think it's stuck in a bit of a range here. Failed at a peak C to make that arch formation. Looks a little bit like the market. If crude oil at 61.08, up 9 cents, actually tumbles under 59 and 58, that key support area, closes under that next week anytime, I think that's a big problem. And the fact that the IYT, the transportation index, is making that H pattern and still weak at minus 1.3, down at 185.43, and that's a terrible weekly chart, and the monthly chart's really like a warning. I have to say that it seems to be crude oil could hold quite well. Now, in terms of, let me go back here, so the INDU, I think that we've made some kind of a bounce low this morning at 24,217. Yeah, 24,217. And that by the end of the day, we could actually improve quite a bit. Doesn't mean to say you can start your buying. I would say that the stocks and only the one or two indices that have actually made C's or a B could have more strength next week, because a chunk of the selling has already been done for now. But I'm now looking at this chart, and I'm saying the pattern I'm looking at from now on is that the lowercase h is going to go to a lowercase m. and then we should rally. I'm not sure if we get back to the 25,500 area, but we should rally above the 24,930s 9-period moving average into the low 25,000s. So now I'm looking at a potential for a lowercase h that goes to a lowercase m pattern. So now I can go to some other questions. I think I've covered what I'm looking at. No, I haven't finished. This candle is a formidable candle. If it works, it tells you that you've made a pretty darn serious top. Well, I don't know if I want to do that. All right, let's just see if I can go there. If you go to the high of there, look at the high of 2007. Remember we made that big doji candle in October, and then in November you made a lower high and you made the Roman candle, Chapman wave Roman candle, and then you had inside bar and then a very sharp sell.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Just I forgot to mention this. The E-mini is up 50 cents right now, 267.50. It's in a 10-minute chart. It'll start leg D at 26.79.25. As soon as it goes to 26.79.75, it'll make the 26.83 200-period exponential moving average some kind of a magnet. Get a little stretched technically, but we'll see if it's able to do that and support, at least unless there's some really bad selling that I think most of the selling must be done, surely. But if there's real bad selling going to the last hour, it better hold 26.65 11 points lower. I think that most of the selling right now is being done for this particular phase. There's some stocks that are looking good. It was mentioned in the Den. Folks, you should try it. The Den is really terrific. The Den, that silver's acted well. Yeah, silver's bounces on the 9-period exponential moving average, up 21 cents at 16.49. I need to see silver get into the 16.80s. As soon as it does that and it holds that for 2 days or so, I'll say, aha, now we've got an H pattern in the daily that says you could bounce 17.06 as the 200-period moving average to just above at 17.20. But until I see something like that, that's going to help the weekly chart. It's just stuck in this darn range. It's really a pity, because if it really moved, you'd suddenly see gold and gold stocks take off. But in the meantime, the dollar, the serious pullback in the dollar from yesterday intraday to holding the 9-period moving average right now says at 90.04, the dollar better hold the low that was made on the 27th of 89.69. If it breaks that, I think that those, I actually think both of them are stuck in a range now. Dollar's in a range, gold is now stuck in a range, but I think that the gold could be a little bit limited over the next few days, and we'll see. That's the test for me. Will fund managers start to go back into gold as saying, I don't know what's going on in the general market. Let's just get some safety here. Okay, that's what I'm thinking, and I also wanted to do something else. So yeah, I think I got asked every day about Boeing and etc. See, Boeing made a top of 371.60 on the 28th of February. I said to the subscribers that to me looked as if it was turnaround day. And the following day, we tried to go short yesterday. We missed going short. Unfortunate, because it would have been, I wanted it in the 360, where was that? Right, yeah, right there. So I wanted somewhere around 360, just about 364, never got there, plummeted, and today it went down to 335. That's 40, almost 40 points. That's over an 11 to 12% correction in just a few days. It's had deeper corrections. It had one back in early February. But this is saying to me that Boeing is finally starting to show a little bit of wear and tear. Let me do XLF, and then I'm going to go back to the candle. I want to mix it a little bit so I can do many of the other things. Yeah, this is now a down arrow for the, I should wait for the end. I will wait for the end of the day. I believe it'll be a down arrow in the XLF on the daily. That's a sell mode. That's just a description. But the weekly chart is really stuck. And if there's a trade, doesn't have to be even a close, but if there's a trade next week at any point in the XLF below 27.50, I think that weekly chart is going to suggest watch out. And I've got a peak E in the monthly chart. I need now to go to, let's do the S&P, because it's the same sort of thing. You know what I think I'll do, because a lot of people don't necessarily actually have, they're not used to just going to the Dow and the S&P. They see them, but they don't go there. Let's go to the SPY, because everybody can pick up the SPY. The SPY right now is trading at 267.68. I wonder if the diamonds is a better description. Yeah, they're about the same. So the SPY, we'll go to the SPY. To make it real simple, the SPY needs to trade right here. The Dow has done it. The S&P hasn't done it yet. In the 264, it has to trade under 264. It's at 267.47 right now. And it has to do that with a close on a weekly basis under that level. And that's just going to, for me, it'll say, okay, now the odds have moved from 50-50 either way to like 65, maybe 70% greater, that you will fill this wick sooner rather than later in the monthly chart. So let's just do that again. Chapman Wave Roman candle. Let me type that in here. CW Roman. How did I come about it? I don't know if I want to waste time talking about it right now. But let's just say you light the candle with a tiny little wick at the top, and then you see a plummet immediately afterwards, and then it closes more halfway or more than halfway up. Not too much up, but about halfway. And that's kind of what this has done. And then you want the candle, just exactly what we've seen, going into the wick. The following candle has to go into the wick. So I'm saying It's the first time I've spoken about monthly candles as being one of the things that I look for. You remember we were looking at, I don't want to compare this, I'm only comparing the candle to the candle of November of 2008. I don't think this matches 2008 all that well. And yesterday I had an email say, wait a minute, didn't I hear you say something about 2002, 1,000 points back to back for the top? For the top. I say that many times, for the top, not a top. This is just a top. This is not the top. When I say the top, I mean we're world markets, where people are trading from home all over the show. When the big crash comes, nobody even knows how much money each person's lost, because unlike brokerage accounts whereas in 1929 you had the glass ticker, people could see the prices and people spoke about it. It was very open, and somehow it was more public to be in stocks. And 1987, the same sort of thing. 2008, same sort of thing. 2007, that is. I think this is going to be one of the quietest revolutions we've ever seen, where money transfers, and I think Bitcoin will be part of the problem, whatever it is. And that's going to be the thing. And it's coming in later, maybe 2019. I don't know yet. We have to see where this even pulls back to. So that's what I was talking about. The big top comes when skyscrapers are in the front page of the news in America. The world's tallest buildings. That means you have to vie. I don't think they can do that. Vie with the Burj Khalifa. I don't think you can do that. But it'll be the United States' tallest building. All right, just tradition never changes. So if I look at the top of 2008, I just want you to mention the candle. Here's the candle. And then what you need to see is that within about 2 bars, it's like my dreaded H pattern. You want to see within 2 bars, there's a break of the most important left side low. And in this case, you've got the low of, you made a top at, I had it all typed in, 14,198, October of 2007. You want to see a close below 11,634. And it took 2 bars, 3 or 4, 5. Actually, this I remember now. This one took much longer. But because in December, I said if December we close under the 9-period moving average, that's going to mean a lot to me. And we did. So this is different. I'm just saying this is a candle that I'm watching very closely, because there's a tradition that goes with this candle. I'll be back. Basil Chapman, Tiger Technicians Hour. Down, only down 152. S&P's down 1. Composite is up 21. Be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we're looking at a slow healing process going on from the lows this morning. We're down over 330, and now the Dow is down only 140, so only down 140. But this is the 4th day of the candles. It's Technical Friday. Let's be a little technical. Let me show you wood, the iShares Global Timber and Forestry ETF. Look at that failure. That's got all the signs of a potential right shoulder failure. In my CD introducing the Chapman Wave methodology, the right shoulder failure pattern is like the dreaded H, chapter 21. Starts at about slide 362, and it's really this large H formation. And we're going to watch this real closely. What happens over the next week is going to be very important. You can see the home builders. Look at this. Philadelphia Housing Sector Index has already made that H pattern. It's gone to a lower low. It's in leg B at 314. And next week, it better hold support in the 304 area. All right, let's get out of this. I want to show you a couple of other things here. Closed workspace. So this is what I do for my subscribers every day. Just a comprehensive look at the markets. I've actually slowed down a little bit over the last couple of days in sending as many charts as usual. There wasn't any need to. I just wanted to try to be as clean as possible. Now, what's really important is I just took that out. Yeah, we are. We're just about on our way to leg D. It'll be leg E in the 5-minute E-mini, leg D in the 10-minute. There should be a much better close today than everyone expected from earlier this morning. Now, I just wanted to show you this. Here we go. The patterns that we're looking at and what I discuss every single day. Look, there's the top in the Dow on the daily. Comes down 3,300 points, goes to a Chapman Wave 5 and a leg C. Runs all the way up. It goes to a peak C. Remember gray because it's underneath the previous major high. But what was important is that the stochastic, while it went positive in the daily and was looking good, and it went above 80%, the MACD did rally, but it was the 120-minute chart that was holding so well right there. And then out of the blue, it went to a D in the daily 120-minute chart at 25,800, and then started this arch formation, which is what I was looking at, hoping it would stop at a certain point because it had the Chapman Wave automatic support and resistance lines at 25,165. Went right through it, went right through the 200-period moving average. That's what made it more serious. So now we're finally in the leg B to the downside after such a big move. There should be a bounce. And the bounce says the stochastic at 12%, not single digits, but 12% is flattening out. It's okay, it's not great. The MACD is trying to improve, but most importantly is in the arch formation, if there is a rally now, it needs to get above 25,941 to 25,060 to go above these two moving averages, the 20-period red one and the black, the 9-period moving average. And this is the same in the S&P, the same in the New York Stock Exchange. So I wanted to just show you that. I just want to have a quick look here to see what we're doing in the, look at that. The short-term trading index at 0.87 had the narrowest range. It just ignored everything today as if to say, ho hum, another day in paradise. It's just kind of out there in the sun, not doing anything. So that's not giving any clues at this particular point. Now, if you're looking at the different markets, the fact that the IWM was the weakest on the way up, did get to a D, and now is the strongest, up $1.72, up 1.14, when the Dow is now down minus 0.51, S&P is up 0.03, much worse earlier on, is telling me that this whole rotation aspect is one that you've got to keep in mind. And that's the reason why I'm saying the monthly chart of the Russell 2000 still hasn't broken for a second time. It hasn't closed under the 9-period exponential moving average until it broke out back in 2016, broke upside about October, November. And then it broke it a few times intra-month, but closed well above it. So here again, we've just started off March and we hit the 9-period moving average of 148.80, and now we're bouncing. So I've got to keep watching that. So I just wanted to give the overview to say, I'm not saying sell everything. What I'm saying is very selective, as I said yesterday when we had calls, very selective. Look at stocks individually, see where they are. Look at the SMHs. What happened is it went to a new high, the semiconductor index. Peak C, I have to call that a peak C. And it seems to me that next week there's a chance that you could get a leg D to culminate that move. And that's going to help the indexes as well to go above 109.14. I don't know if it will. I'm saying that's kind of what I'm expecting. There's another way to look at it, and that's slightly lower low from the 95.92 low of the 6th of December of 2017, when you just snuck below it at 93.88 by 4 cents. Technically, this should be a D going to an E. And in fact, just for Chapman wave enthusiasts, I'm going to put that as an E/C with just a very rare aberration of the lowest low, taking out and restarting a buy mode. In this case, I'm saying maybe it's still a continuation. Just keep it in mind. It's better to be wrong and cautious to be a little arrogant, thinking you know it exactly, and wrong. So that's what I'm doing right now. So a question I had was, would I look at the XLF trading right now at 28.41? I think it's going to struggle a little bit, especially if yields just for a short term come down a little bit. Oh, now the Dow's only down 97, S&P's up 3. So I think we have made a short-term low. This is not the residual low, I don't believe. I think there's more to come. I think there's going to be an arch formation, a second arch formation, making an M formation in many of the indices. I think the QQQ, wow, can it go from 165.05 to 170.95 area? We'll see. So we're just going to go step by step. Question I had was X. Yeah, X is holding quite well. It's at 45.58. It's down 43 cents at 45.58. It obviously still is going to be the beneficiary. So I think the American steel companies have a good cushion. I just didn't know what would happen after the news is out. Was it a sell the news type thing? I still don't know that, but definitely steels are holding very well. And steel has been on our list for a year, and we haven't had steels too often, and I'm afraid that was an error on my part. Should have been in. Even now, we had one that sprung back the very next day, but that's the way it is. So, yeah, we have had steel. We had Reliance Steel. We had some real nice profits in that. XOM real quickly, and then I'll go to the Den questions there. But I look at, first one was, let me go back right at the beginning of the show. Would I look at, oh man, where did it disappear to? Okay, so here we go. Would I look at, just at gold and silver? Okay, and the other question was, There we go. Okay. Would I look at Goldman Sachs? So we've got XOM just for the moment. I had that up. Still looks very weak. I'm not really interested in XOM right now. I think that there are other ways of looking at dividend stocks. Goldman Sachs, is it coming back? Oh, I just typed into the den by mistake. Goldman Sachs. There you go. Goldman Sachs is up to a 258.80. It made a top. Now this is the big question. Oh, technical Friday. Let me get technical. Let me just do this. It made a lower low, therefore it has to be. Yeah. Okay. I'll be back. We'll talk about Goldman Sachs. Looking quite good.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So there it is. So I said that if the E-mini in the 10-minute chart can break above 26, what did I say it was, 26.79, we should hit the 200-period exponential moving average, the green line, at 26.84. Boom, it just did that. So now we're looking at the Dow down only 67, S&P's up 6. This is definitely a nice turnaround day, and we'll see how it unfolds next week. I think we go to the H pattern. So Goldman Sachs looking good. I think it's kind of in a trading band right now. I wouldn't be surprised if it bumps into resistance. It doesn't make, see, it went from the double top high, peak C1, C2 at 273.79 on the 29th. It went to 273.12. So 273.12 just underneath. So that's a gray. Yeah, that's a gray peak C right there. So it doesn't have to make another high. I think Goldman should rally, and I think it's going to bump into resistance from 258 in the 262, 264 area. and then start to work its way down again. That's the way I'm thinking of it right now. And that's kind of what the monthly is also saying, that it's looking great. It just needs a little bit of a consolidation based on what's going on in the weekly chart. Next thing was cyber. When I look at cyber is, whoa, this is great. Leg A, B, leg C. So this is at 50.53. Nice rebound. Should go higher. This is cyber software, CyberArk software, trading at 50.53, up $1.10. It does have this resistance right here in the monthly chart that could stall it just a little bit right there. Yeah, just a little bit above. But so far, very good. Weekly chart is looking very strong. Peak A, B, C, D, E. And this is a brand new A, B. I think this is a brand new leg B. I think cybersecurity is one of the areas that we're looking at for this coming period where other stocks and stock areas start to fail. So, yes, it's looking very good. Must hold 48. It's at 50.53. Hold 48 next week as support. Looking good. Next question I had is, would I look at? Oh, is that a break? Hey, that's the end of the show. Have a wonderful weekend. Stay tuned for Steve, Dave, and Tom O'Brien. I'll be back on Monday. Check out my opening call. I think hopefully you'll find it interesting and lucrative. Be back on Monday. Have a great weekend.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter